Hello, everyone, and welcome to another episode of Blockchain Versus. I am joined here by my co-host, Mr. Jeremy Born, and we have three very special guests today, Mr. Oz Sultan, Mr. Kyle Ray, and Miss Sam Elise. All of them are experts in the field, and we are here today to talk about Doomsday risk management. For those of you that don't know, it was a very difficult week in the markets. There are a ton of indicators that CoinGenius saw 3 weeks ago. And we want to make all of this information public so that all of you can protect yourselves in what we are identifying as a pandemic market regime. With that said, I'd like to turn it over to our guests to introduce themselves, and we will start with Mr. Austin.
Sure. Hi, this is Oz Sultan. I advise a number of funds. I'm on the board of a number of crypto projects, including being an advisor to CoinGenius. I was in big data around economic market indicators for several years. I built all of the, I guess you'd call them digital data products around big data at The Economist. I've worked on a number of presidential campaigns, as well as leveraging kind of that informatics science or the big data science inside of the blockchain arena. I've worked through multiple ICOs and am now primarily focused on a bit of research, a bit of consulting, and a bit of advising within the blockchain space.
Thanks, Oz. Kyle?
So I've been in crypto since 2016, investing since 2017, mentoring towards the end of 2017 about kind of how to maneuver throughout the crypto space, since it's kind of difficult to onboard sometimes, especially for general public. And then I kind of just stuck with it, and I met Miss Sam at WCC Vegas, and we kind of like stuck together since then. And my background's in digital architecture, strategies, and entertainment industry.
Thank you, sir. And Miss Sam, your expertise.
I don't have any expertise. I'm a nurse.
Hi.
So, Kyle, thank you so much. I adore him. He actually helped save my life. I actually was a hospice and home health nurse for 12 years, and I have an undergrad in chemistry. And I was hit by a semi-truck. I was plowed into another semi-truck and was unable to work as a nurse anymore. So at that point, I took out my nursing retirement and went all into cryptocurrency. And I fell in love with the technology, absolutely fell in love with it. And this was in 2016. So I reached out to industry leaders. Dmitry Vitalik's dad actually trained me in blockchain from Block Geeks. And then I wrote the first book on stablecoins and released that. And now I speak and I own Give Nation. And we are producing a stablecoin. We're a financial literacy program for children. And we have an AI gamified wallet that you can download on your smart device now and get your kids learning. And Kyle and I did meet at World CryptoCon. He saved my life. He's one of my best friends in the whole world. And I love Oz and you as well. So I finally met you in Miami and absolutely fell in love with all of you. So thank you.
Aw, we're one big happy family here. So really,
we really are.
It really is disgusting how much we all love each other. Like offline, it's gross. Oh my gosh, it's like ew. Actually, speaking of germs and gross, Mr. Jeremy Born, can you give a quick summary? We have another podcast called Genius Wednesdays where we do weekly market analysis, where we take the 24/7 landscape of the crypto market and we overlay the world's open and closes of the traditional capital markets. We look for correlations. We watch, some of our proprietary indexes, the macros, the trends. We look at both technicals and fundamentals. And the data is always lots of data, but it looks different depending on which lens you're looking through it. This last week, it didn't matter which lens you were looking through it. Everything was sliding down. And we had seen it 3 weeks ago. But Jeremy, if it's possible for you to give an overview for the listeners of the current landscape as to why we're calling this a pandemic market regime and why we've brought everyone together to discuss risk management.
Yeah, no, thank you for the intro there. It's a really interesting time to be alive, especially when you're in data and analytics and big data, and you're looking to analyze a lot of data sets and predict or have some sort of predictive capabilities to understand and ascertain what's happening in the future. Not an easy task in any regime, but in a pandemic regime, the interesting thing is in times of extreme fear, we realize that people tend to do a lot of the same things, and they have that herd type of mentality, which is why we're seeing cryptocurrencies very similar to that of equities and moving in conjunction with one another. So the correlations are much higher as opposed to other types of market regimes where they're completely decoupled or, coupled one day and decoupled the next day. So that's what we try to analyze from a data science and artificial intelligence perspective to ascertain where these things are going. What we've been looking at and calling, in terms of where we anticipate the market's going over the last several weeks, as Kristina mentioned, a lot of which is discussed in real time, more so on our Discord channel. So if anybody's interested, go ahead and check that out on our website. But that's really just our unfiltered response to what's happening in real time, whether it's coronavirus, whether it's, equities, commodities, or cryptocurrencies. And for a little while now, as soon as we saw what was happening in China and, understanding that that country particularly always underreports things, or at least, just looking from the past, we anticipated this was the level of the magnitude of the situation was far greater than what people are giving it credit for. And then we started doing a lot of, deep dives into flight paths and flight records and things like that from those particular areas, and saw that moving potentially to Italy, saw that moving from Italy over to New York, and all of these things seemed to unfold exactly how we were assuming they would without, having that crystal ball. And we just knew it was just a matter of time before it started impacting the world, because we're such an interconnected world and people are traveling from all these hubs everywhere. And as soon as we saw it in Iran, as soon as we saw it in Africa, we knew that this was something much bigger. With all of that said, as it relates to this particular topic, we've been thinking over the last 3 weeks and have been talking about this on Genius Wednesdays as well as in our Discord, that because we feel that it's tightly coupled in this extreme fear state to equities, we feel that it's only a matter of time, because of our interdependence on places like China and other countries, that the U.S. economy would suffer in a tremendous way, more so than what most people would anticipate. And sure enough, I think we're seeing that. And, the people that were listening, I think did okay in terms of mitigating risk and getting into either liquid positions just to wait and see, and or, betting against it. So with that said, I think moving forward, some of the things that I'm seeing, I'm drawing a lot of correlations to other pandemics. I'm drawing some correlations to the Depression of 1929, or what happened in 1929 as soon as the Depression was hitting, which was the stock market crashed. And as soon as there was some sort of government interaction, it seemed to have recovered, I believe, up to 50% before it then went down significantly lower than the previous low. I think we called that out yesterday. And of course, today we're seeing the stock market return to a little bit higher highs. And I anticipate from here, especially when earnings come out, things are going to look relatively grim, and the stock market's probably going to go down significantly below that. And once again, because we deem cryptos as a speculative hedge, I think that's going to follow as well to a certain point. And eventually it will decouple, and people will realize that it is a very powerful means of exchange.
Thanks, Jeremy. I'd also like to point out, just for context, that there's some other themes going on here too, around basically the social media and the interconnectedness that we have today. That fear is generating right now on a sentiment level. We're seeing it on an NLP level. But you're also, when people start hurting, they're going to talk about it on their platforms, and it's going to be much more visible than it was previously, 10 years ago. The other component is, I already lost it. So Kyle, can you jump in here? I know you had a very rough week, but we're trying to talk through fundamentals and how to protect yourself in situations like this. You're very respected in the trading community. Can you talk a little bit about what these changes of tide have done for your strategy? Kyle, did we lose you?
Can you hear me?
There we go.
Oh, there we go. So, yeah, it's been a rough week for anybody who did not see a short coming. Every bullish signal that we possibly could have seen was right there. Then within like an hour or two, it wasn't. So what you going to do other than control your emotions? You shouldn't be trading or investing at all if you can't do that. I know that it can get overwhelming. It consumed me, and I got to take my own advice there sometimes. So the first thing is look at the overall time frame. If we're just on the cusp of something much greater, then yeah, you got to hedge, and the only way to hedge really is by using stable coins in crypto because you can't get out of it fast enough. I know there's a lot of speculation about Tether, but right now Tether is actually like one of the coins holding up the market in a sense. Who's making all the money? The exchanges. What can you do about it? The two things that I've noticed, and so many people have not noticed this, and I start telling, other respected traders and stuff, and they're like, oh my gosh, I didn't even know about that. On Binance, there's a bull and a bear pair. The bear is inverse of bull. So if we're going to keep tanking, when you buy the bear pair, it goes up. If we're trading sideways, you don't know where you're going to go. You can just sit on the side in the stable coin. You don't have to trade, but you have the opportunity to 24/7, 365 because the market's still going. You can make still a killing if you want, but it's highly volatile and it's a three times leveraged coin. So, I mean, that's the only real thing that I can see. Other you're gonna short it and hope that we found the bottom, but if we don't and you see these massive fluctuations, you're gonna get liquidated. With this coin, you don't get liquidated, you just take the hit. So if you think ultimately it's going to go down, just hold it. If you think ultimately it's going to go up, hold it. If you're unsure, just don't trade. That's the only advice I could give really right now. A lot of people are taking cash out, transferring their crypto over to fiat. Now you got to wait 3 or 4 or 5 days. So if you're trying to hedge and you're stuck in a jam on one exchange, you should be signed up to 3 or 4 or 5 exchanges. Because who knows if one of them is going to go down. Plus, some of them have higher fees and lower fees. You want to maximize on saving your money. You need to calculate into all of the fees that you're seeing on each exchange, how long it takes to pull your money out, how long it takes. Like Coinbase will lock your coins down for 10 days once you wire money in. So you're locked in a system. So these are things that you got to think about. Or you could use a crypto debit card. Store your Bitcoin, which is kind of silly now because no one wants to hold Bitcoin. And it transfers into a Visa. So you can pay anywhere with it. So those are multiple options that I've seen for how to hedge against what's going on. Ultimately, especially what Kristina said is you shouldn't be investing if you don't understand what you're doing. A lot of people, outsiders, have been asking, should I buy Bitcoin? Because they saw it dump. If you have no idea what you're doing, right now is probably the worst time you could ever get into crypto because we don't know what's going to do. Sure, you could hop in and get lucky and make a lot of money on a bounce, but if you see a dump and you look at how chart cycles go, this is the first leg in a long leg of a bearish trend, I think, especially if we get a ripple effect across the globe. So where's crypto at? You can still make money daily, sure. There's going to be risk, but some people don't have a choice. So, I mean, do what you got to do, but that's what I got to say about it.
I would completely agree. And I'd like to go, just insert a real quick hashtag not trading advice here, right? We're not
financial advice. I'm not a financial advisor. I'm just a guy who's been in crypto, and this is what works for me.
Right.
So
and what we're doing is trying to just tell you guys, what we see, because people just want the answers right now. And now is a time that you guys need the answers. So I am being a little more forthcoming than I normally would be in some of my forums, just to help protect folks. And most of that comes from the aggregated information from CoinGenius Discord. I'm not as smart as I sound in there. It's because I have a team of geniuses behind me. Speaking of geniuses, I want to mention two things. One is, I remembered my earlier point, which is the manufacturing slowdown and impact of, just the global economic engine. As money goes around, as people are not going to restaurants, as they spike up in toilet paper sales, all of those economic factors should be considered, because that manufacturing slowdown affects the economy later this year. So you're looking like April till June. That's right in the same time of the BTC halving, and that's right in the same time of the election. So these are going to be event triggers. That being said, Kyle, you mentioned stable coins. Ms. Sam, can you please give an overview for the layman of what a stable coin is and how that's different than the other tokens that are like mining based or otherwise based in the industry, and how that ties to the global financial construct as it relates today? I know that's a lot to unpack, but if you could just educate our users on what is a stable coin, that'd be great.
Well, yeah, that's a lot to go over. So I'm going to start writing a book now again. And yeah, let's see. A stablecoin, simply stated, is a digital asset that is backed by a commodity. So, for instance, we have a lot of people have heard of Tether. It's been in the news a lot because it was the highest traded cryptocurrency at the end of last year, more so than Bitcoin and multiple altcoins combined. That got a lot of attention. A lot of people have heard of Libra. They want to have a stable coin. These are backed by fiat. And so Libra desires to be backed by multiple fiat currencies. So I wrote a book on stablecoins, as I previously said, and there's two different types of stable coins. There's collateralized and then there's non-collateralized. And the collateralized are those that are backed by a tangible commodity, typically, or fiat, which is not backed by anything. And then the non-collateralized type of stable coin is an algorithmic stable coin. And so it's backed by data. And then there's a hybrid that can encompass many or a lot of different categories. Now, Kyle, I absolutely love you. You know, you're like a brother to me, literally. This guy, when I say he saved my life, I mean it. He literally saved my life and called me every day. I was almost dying in the hospital. And so he went out of his way for me. So, but I will absolutely disagree with you. It is time to get into cryptocurrency right now. And let me tell you the reason why. It is because of stable coins. I mean, you can exit in and out of crypto amazingly easy now with stable coins. So I'm going to walk you through an example. If you go on Gemini or Coinbase and you hook it up to your bank account, you can transfer $50 in immediately. Say right now, I don't know what Bitcoin is. I haven't looked at it for a few hours. It was like 4,500, I think, the last time I checked. You can access and you can purchase that Bitcoin, and then say it starts dipping immediately. You can trade it right then and there for multiple stable coins that are on both of those platforms very easily. And then you're backed completely by fiat. So you have, Tether is $1. It's supposed to be $1. So as long as the US dollar has value, that stablecoin has value. And then I've been looking around our different chat rooms and whatnot, and people are saying, go buy gold, go buy gold. It's still a stable commodity and it's always going to be. People right now are stocking up on it. Well, how are they doing that? Where are they getting the resources with the coronavirus everywhere to go and obtain this gold? A very easy way to do that is with a stable coin, a metal-backed stable coin. I like to use Anthem Gold as an example often. Not only is Anthem a good friend, but he has actually produced what I term a perfect stable coin. He has a vault. His gold is viewed by camera 24/7, that you can look online and see it active. When it's shipped to you, it's all cut, weighed, everything is taken pictures of. There's a camera on your gold at all times. All of this information and data is backed on the blockchain. It's absolutely perfect in every way, shape, or form. And so if you want to buy gold, a stable coin is a really great way to do that. And you're still buying cryptocurrency and supporting our dream of eventually having a great decentralized economy. The market changing aspect, it's terrifying. I think everybody's saying we're going into a huge depression, and I know that I'm sad, so I can believe that that's true. There's a lot of things to fear in the future. As a nurse for 12 years, and somebody who is still recovering from illness, this coronavirus is very concerning. And then for those of us that travel, almost all of us here have to travel for work. What is it doing to our personal incomes? We're all suffering, and so are other people out there as well. And that is affecting the economy in huge, huge, huge ways. So I just say it's a really great time right now to be positive, and to do a lot of research right now. Somebody told me yesterday now is the time actually to bunker down and work on, your business, work on yourself right now. Don't have mass hysteria, mass panic. Don't manifest any more negativity out there. And let's just conquer together. Stop buying all this toilet paper. I don't know why there's such a huge collection of toilet paper going on. I don't know what type of digestive issues everybody has, but maybe we need to talk about diet next.
Oh my gosh.
Yeah.
So Sam, really quick, I do want to make a clarification point for our listeners. I would like to just share that what I think Kyle was saying is you don't want to be in leverage or in margin positions and like learning the market right now. That said, Sam is also very correct in that if you, like me, believe in the long run of crypto, that digital assets are the future and that the world is going to look very different in 10 years, now is a great time to get in to BTC. You couldn't get these prices, a month ago. So if you believe in it, then now you're basically getting on sale. It depends on your strategy. It depends on how you are looking at it. I'm not saying go out there and buy BTC or go out there and buy stable coins, but if you do want to protect yourself financially, those are options in places that have been demonstrated as a store of value. If you look at the charts of the things, you can see parabolic lows and you can see consolidation patterns and what they call the bottom. It's actually very uplifting that we haven't pushed further. Not that I'm, the ominous they will do what they want, and we're the tail on the dog here, but if you do believe long in crypto, you're seeing some of the best prices you may ever see again. That said, Jeremy, I know that you have a comment on that, and then I'd love to hear from Oz.
Yeah, no, absolutely. I tend to agree with a lot of what's said. Really, here's my biggest piece of advice. And once again, I'm not a financial advisor. Go do your own research. However, this is coming from a person that's made every mistake in crypto and lost money, gained money, learned the hard way, as we all do. Right? And now we're running an analytics company that gives insights for crypto traders. It's pretty serendipitous, right? But the biggest piece of advice I could really give is, develop your own thesis. Do research, just like everybody else said, but do deep research. Really understand the implications of the technology, what it can do. where the world is moving. I mean, think about people working from home, whether it's 2 weeks, 3 weeks, 6 months, whatever the case may be. That will fundamentally change how we communicate. And that's why companies like Zoom and Teladoc are doing relatively well right now in the stock market. So really, it just comes down to understanding all the implications of things that are happening, follow people who know what they're talking about, and really develop your own thesis. Don't get distracted by all the noise, because there's a tremendous amount of noise out there. There's always going to be somebody telling you, one thing or another and swaying your opinion. But if you really develop a core thesis for you that takes into account your time horizon, which means like how long do you have to invest this money before you're going to need it back, and then your risk tolerance, do you have low risk, medium risk, high risk? Obviously, people that are younger have a longer term time horizon. Therefore, you can, associate yourself with more risk, right? And you can have more risk in your strategies, right? So utilizing those type of methodologies, develop your thesis, and literally invest however you see fit based on that thesis and stick to it. And that's my biggest piece of advice, because the second I did that is the second I started winning a heck of a lot more, especially in crypto.
Agreed. Again, just hashtag DYOR, do your own research. Really quick before we pivot to Oz, I know that's almost like too much buildup, but real quick from Kyle, I know you wanted to make a comment here.
Yeah, so I wanted to yes and to both Miss Sam and Oz. Oz's is quick. Yes, develop your own thesis, because crypto is speculative. We don't know. Like, you have to fill in your gut that this is why you want to enter the space, which means you need to do research, which means you should probably, develop your thesis based off of information that you feel makes you more confident about investing. Another thing is hedging. Maybe it's not a good time to go all in on crypto because we don't know what's going to happen in a month or two. What if for some reason they don't have a virus cure? What kind of, I literally just got back from the grocery store and every single parking lot is so packed. The lines are so long. There's nothing on the shelves. It's only like the first week. I mean, maybe it's just because we're getting the information now and panic mode is pretty intense, but it's you got to think about how to protect yourself, your family, and your health before thinking about investing in things. However, with that said, and how to yes and to what Ms. Sam had said, it is a good time to get into crypto, but don't invest in anything that you can't afford to lose, because if you're learning, then you need a mentor. There's not a lot of people in the space that have really come out extremely ahead since the beginning days. Maybe the whales, because they can pull their money out and everybody else follows them. That's like being the dog on the tail, or the tail on the dog. But if you feel like now's a good time and you can wait a year, 2 or 3, for sure. You could make money every single day. The market goes 24/7, 365. There are coins that are always going up when the market goes down. The rest of the market, when it goes up, I woke up this morning and the EOS bear was up 111%. Where else can you flip your money in 24 hours? Literally double it up. So let's say you only have $25 you want to invest, and you're I think the market's going to keep going down. Just hold. Don't sell at a loss. Every time you sell at a loss, it gets harder to regain that money. So you have to feel it's this one sentiment or that. So, there's always ways to make money in crypto. And yet, it is easy to onboard into a stable coin and just buy whatever. But you got to understand what's the long term. If you're going to come in and trade, you need to know what is the time frame that you're going to trade. I'm going to trade for 15 minutes. If it doesn't go this way, I'm out. If I lose 10%, I'm out for the day. You have to set rules for yourself. So that's part of being a crypto investor. That's part of a lot of people need good mentorship and training, and the only way you're going to do that is find someone who's lost as much as that they've won. If they've never lost, there must be something going on there, because you're going to learn more from the mistakes rather than from the successes. But if you can do both, in 2017, I turned $10K into $250,000. Obviously, it was a bull run, but with that said, I didn't have a mentor. If you do have a mentor, or you have CoinGenius type network, very intelligent, artificial intelligence, stuff like that, you got the advantage that most people don't have. So that's just why I wanted to add to that. And yeah, hopefully that helps. Again, not investment advice.
Thanks, Kyle. We appreciate the plug. Mr. Oz, I'd like to take a pivot from going as granular into the behavior of the market and the underlying mechanics. Can we bubble all the way up to the 30,000 foot global view? I know we're seeing a ton of macros. This coronavirus is impacting everyone, even if you're healthy and you've sequestered yourself, even if you don't believe in it. You can see the impact that's happening on the world. It is quantifiable. Oz, can you talk a bit about that and kind of just set the stage for those that are maybe only, getting one version of the flavor of the quote unquote news?
And some of the stuff that Jeremy had talked to, which is, can you hear me?
Yeah, sorry, go ahead. Can you try that one more time?
Yeah, so it's interesting trending and tracking this and seeing this from a global macro perspective, especially when you factor in what Jeremy had said initially, which was, we saw this in terms of some of the movement from China to Italy. We saw this in some of the movement from China to New York. We've got a quarantine zone in Westchester County, which is New Rochelle, which is, about an hour and a half from New York City. Trader Joe's in most locations in New York and New Jersey were stocked at 10 a.m. They were empty by 1 p.m. Okay, and we're seeing this across the board. I think one, to echo Kyle, is make sure you're prepared for your family and yourself. Preferably plenty of clean water. Two is just talking from one of my buddies who's working with the CDC. If you can take a breath in and hold it for like a 10 count, you're probably fine. But in terms of assessing what your risk is inside of some of these environments, understand that the spread is about 19% per day, okay? And the mortality rate on average is about 2%, but the mortality rate for this is 14% in people who are over 60 years old. So, keep those considerations in mind as you're going out there. But when we start looking at the macro view of the market, the impacts that are going to be felt, which are sustainable impacts by the growth of coronavirus, are first going to come out of China. The first thing to think about is that 94% of global supply chains have been hit. What that basically means is anything that you see inside of the Fortune 10,000, you're probably going to have restricted access to some of those products that are not being domestically produced or being produced, under the new NAFTA accord that the president negotiated, simply because they're not going to be accessible. Secondarily, with the flight restrictions coming from Europe, also consider the fact that that's not just commercial carriers, that's freight. Okay, so a lot of stuff is just not going to make it here. And what that's going to do is that's going to inordinately drive up the prices of things that haven't already left the shelves. And then, look at also the factor of what Sam had talked about in terms of just stablecoin trading. For everyone out there who doesn't know anything about crypto and hasn't touched this, what you're basically doing is Forex. You're doing foreign exchange trading. And for anybody who's traveled around the world and come back with, a pocket full of a bunch of bills, you're typically not dealing with more than a couple bucks or a couple $100. But in the opportunities that we can look at from the crypto market right now, and even in the traditional markets, what you're looking at is big Forex opportunities. I talked about on Wednesday how the euro is probably going to collapse, and part of that's not just due to the current travel ban to Europe, but it's also due to the fact that the euro itself is saddled with an extreme amount of debt. They can't figure out how to cover costs post-Brexit, and inside of a massive economic downturn, where as a collection of countries, they can't collect VAT, they are seeing lower sales, they're seeing lower engagement in retail, entertainment, and any other consumption sector, they're just going to continue to look at a longer-term downhill slope for the euro. America, interestingly, is oddly somewhat protected. China's trade with us is only 8% of our GDP. However, our trade with Europe is a significantly larger portion of their GDP. So, those are things to kind of keep an eye on just in the traditional market. In terms of the crypto markets and the crypto assessment, Kyle and I were talking about this. I mean, you're seeing waves of 10 to 30% up down moves across a breadbasket of, probably the top 10 cryptos, with, correlating up and down movements to the breadbasket of the top 100 cryptos that are out there. And if you're not going to go and do the research to try and understand these things, you could end up with a bad time. The overall impact that I see now is going to be multifold. We've got earnings reports that are slated shortly, and what we're going to see is that this quarter, for pretty much everyone outside of a handful of technology companies, no one's really going to be doing well. Secondarily, we're going to see between this quarter and next quarter a massive downturn in a number of commodities, whether that be oil and oil derivative products, whether that be farm futures, which includes beef, pork, chicken, and a variety of other things, or whether that includes agricultural products. Because what we're going to have to keep an eye on is what is the opportunity chance of supply chain disruption, and what are also the weirder effects that we're going to get from exclusion zones, where maybe there's transport of foodstuffs and water in and out, but you really have people pretty much confined to their houses or hospitals or things like that. And then there's the last consideration, which is, basically the pandemic bloom. And so we saw this in Italy, where, very much like a field of flowers, it went from one bud to millions of buds over the course of, maybe a couple of days. And what we're now looking at is a need for them to come up with both a vaccine and a treatment serum or a treatment protocol that actually is going to solve this thing, because otherwise they are very much looking at plague type numbers. So three things to consider. One is that from a Forex perspective, we're looking very much at, the volatility that we had sometime between 1992 and 1994, largely in between the European currencies. And a lot of this is going to be tied to interbank lending, because countries have to borrow massive amounts of money on an overnight basis just to pay everything from, pension bills to salaries to whatnot. But the indicator, I think, that's going to show that things are going to take a downturn are, where are people standing in terms of their acquisition, holding, or liquidation of federal bonds from many of these different countries. If you look at what China's doing, they're not moving and selling treasury bills from the United States. And over the course of the past 3 weeks, they've put the equivalent of $85 billion of renminbi into their own market, just to make sure that it's stabilized at the peg of about 7.2. But they themselves may have to do a reset on that, and that's going to have, again, cascading impacts to not just the wholesale prices of things, but the resale accessibility of this. But the supply chain impacts across all of this are really what we have to watch. We have to kind of start coming up with better indicators. And after all of this passes, what we're probably going to be looking at is a lot of consolidation like we had in 2008, except it's going to be across a multitude of different sectors. Half of these commercial air carriers that have purchased their planes on 30, 60, 90, and sometimes even 100-year mortgages are going to have a lot of debt to deal with. Planes themselves that are going to Europe, even though there's a ban. Okay, there's a ban for you to travel to Europe, but because of laws that exist in Europe, the carriers have to carry deadheads, meaning they're just flying empty planes back and forth to make sure that they can keep their routes. So these types of secondary effects and these types of regulatory impacts are going to have a massive, cascading effect on what happens to these companies by Q2, Q3, and I think by Q1 of next year, massive consolidation happens. What we can also look to is very much like what happened after 1929. Up until that period of time, the type of market analysis that people would do in companies wasn't really there. If you look at the Ponzi scam of Swedish Match, which occurred in the 1920s, everyone was looking at what the optics of this were. They weren't doing a deep dive into anything. And I think what what is going to come from this, from the traditional market and also into the crypto markets, are better tools, better, we're working on some, I mean, obvious CoinGenius plug, but there has to be standards, and there has to be baseline requirements for how you look at not just the investments that are being made inside of companies, but how money is being utilized inside of these ecosystems. A lot of what the global markets work on is leverage and liquidity. Liquidity is down, okay? And in the crypto markets, we're still seeing the opportunity to go to 125% leverage on trading accounts. In the options market, in the futures markets, in the traditional economy, as well as in some of the Forex markets, there's still that kind of access if you have the capital and you have the connections. But the big delta is that anyone can do that in crypto. You don't have to have a JP Morgan bank account with a minimum deposit of 10 grand. You don't have to have a business account with TD Ameritrade. You don't have to have a trading account with Merrill. You don't have to have any of these things. So the short term of this is going to be really kind of interesting. We can see that American companies and global companies are probably going to take some sort of major margin hit, which will result in a cascading economic downturn of the stock market. The $1.5 trillion that I shared notes about that the Fed is pumping into the market to stabilize things is probably going to have to be done a couple more times. The negative interest rates that the Fed has right now, which are at -1, -2, could go as low as -5, which will have significant long-term ramifications to just the lending market. Lending is going to get tighter. So, if you think that you have risk now and you have a home equity line and those types of things, I strongly advise you to at least leverage a portion of that to create a little bit of buffer for yourself, because in 3 to 6 months, they're going to start recalling these things. The risk with banks is that we end up with a bank run like 1991 and 1992, where all of the regional banks in America collapsed. The risk that we have for just average everyday people is that whether you're in America, whether you're in Europe, whether you're in Asia, or the African subcontinent, you're going to have to be looking at things from the perspective of what's tradable, what makes sense, from getting involved from a fiscal perspective. And then after this, I mean, we could be looking at some very, very hard resets to not just the way that markets work and markets operate, but we could be looking at a significant change in policies from the financial market perspective, from crypto mom Hester Price down, as well as what the long-term impacts are going to be to trade bills that are currently in process, to trade negotiations that are currently in process. People forget the fact that there's increased tariffs on European goods right now. And if they can't get to some sort of consensus on Airbus over the course of the next, call it, year, the European goods will get more expensive, and Americans will most likely look for replacement goods in that. And then in terms of what you're purchasing, be a little cool and groovy with yourself. You don't necessarily need that new phone. And guess what? Tim Apple may not be able to actually get that phone to market. In fact, the only people that might be able to get some of this stuff to market is Samsung. And then the last thing to consider is, what you touch, what you access. Everyone's going to be looking for recommendations and validations that whatever they're purchasing, it hasn't been contaminated in the supply chain with Corona. And for that, I see, honestly, just a massive opportunity for blockchain and blockchain technology to come in. More so from the perspective of actually validating things and providing people with goods and services that they can trust.
Nice. Thanks, Oz. I was going to ask you how bad could it possibly get, but I think you covered that. All right. Well, I would like to actually turn this over to all three of you. There's an immediate impact to our social behavior. And when you look at that globally, it's on a very big scale, right? I mean, just anything from working from home to, I tried to order pizza the other day and I had to call 4 different shops before I found one that would deliver. They were like, nope, not today. We're never delivering ever again. That changes the way that people interact with technology, with their goods. You're seeing people sequester themselves. So I think that, just the impact to the work from home, and that Fortune 500 is having to take this very seriously and create new policies. I think that, you have to anticipate that the world is going to look very different in 1 year from now. I used to say 10 years from now, but I think 1 year from now it's going to look very different. The only silver lining that I see here, excuse me, is I think for the first time in history, we might actually see Bitcoin decouple from every other coin in the system. Bitcoin is a standalone coin. Everything else should be evaluated on its own merits as well. So I'd like to ask all of you, what are some of the things that you're looking at, and what does the next year look like for crypto based on all of this volatility and these changes happening?
I guess I'll go first because this is what I do pretty much. So what does crypto look like? From what I said, speculative still. Did it hold up its value? No, it crashed along with the market. Everybody's stored in a stable coin, unless you're the exchange or you're shorting it. Or, why is there a lot of Bitcoin that wasn't sold? That's because those people lost their private keys, or they're holding through the storm, or whatever reason. The long term, I would say if you're going to go and research all of the coins, start with the top 100, and then you guys think like the ripple effect that's going to have. Think psychology and sociology, human behavior. This whole market was created from a human mind. The only things that a human needs to survive is food, water, shelter, and relationships. If we have that, everything else is a game, right? Or it's not like a priority, right? So knowing that, what kind of coins impact that type of social behavior? Okay, so LinkChain did a partnership with Google. Everybody's going to be on their phones, right? They're going to be on their phones researching stuff using Google. Who's that tied to? LinkChain. What are browsers people are using? Brave browser, which is BAT token. Think like that. Like, where are we going to start moving to? I think a cyberpunk future is among us. Everything's going AI, everything's going virtual reality. Think about real world solutions. And I was on social media the other day, and I saw that quote. I don't remember who said it, but it said something like, when the wind blows, most people get blown away, but some people build windmills. So how to sit aside, let your emotions go. There's nothing we can do about it other than react. So you can't just react to today. You got to think long term, 6 months, 1 year. If you want to stay ahead of the game, you got to figure out a way to provide a solution for what may happen or what is happening. So some coins do that. Some cryptos do that. Like, what cryptos are so powerful that they're just not going anywhere. Like, they just won't die out. That's who I would say, if you're going to invest in crypto, do that research. And how you can do that is go to CoinMarketCap, and each coin on there listed has all their websites, social medias, all the informations about them. Go do your research and join some crypto groups. They're all over Telegram, Facebook. Those are the main places. Discord too. Go there and hang out with the people, because some of those people already been in the space a long time. You can get real good, valuable information. So if that's something that you're like passionate about, then I would say that's a good start. If you have any questions, I guess you can always reach out to any one of us later.
Awesome. Thanks, Kyle. I know I'm a big fan of Chainlink as well. Mr. Jeremy Born, really quick, there's other coins that you find are kind of part of the new backbone of the new crypto market, the ones that you're a true believer in all of the quantification data points behind it. Can you talk a little bit about some of the coins that are of interest to you, Jeremy, and then maybe the panel can kind of reply back to that?
Yeah, sure. So if I'm thinking about the long term, what I'm looking at is which one has the propensity to actually succeed. And I base that on a number of different factors. can't get into all of them because it's just too vast in terms of all the different data points to look at. But I think if you really look at engagement and community, those are going to be the biggest things that I would look at if I was assessing any coin. You want to make sure, number one, if you go on a site called Crypto Miso is pretty interesting in the sense that it's not perfect, but it shows all the development activity for each one of the projects. If I was going to bet on any particular coin in or project over the long term, I sure as heck want to make sure that their developer community was robust and that there was a lot of activity. So that's one thing that I look at. The other thing I look at is it a solid use case? Like, are they trying to solve for something that I believe in, or is it just something that is a tip my friend gave me and, maybe I'm just getting in early? I truly believe that if you're investing in something in the long term, you have to believe in their mission and their values and what they're trying to accomplish. And if you think they can do it, and I assess their team, and I look at their team page, I go on LinkedIn, I cross-reference to make sure it's not a bunch of fake people, and look for references and whatnot. And I think the team has applicable experience in different industries that allow them to potentially succeed in what they're trying to accomplish. That's very strong for me. Who their advisors, who's willing to put their name on the line and say that, yes, this project is credible, and I'm willing to put my name here even though I have a pretty big reputation. Social media, right? When did they create their account? Did they create it a long time ago? Did they create it last week? Is there a bunch of bot scammy stuff activity going on in there? Is there a lot of engagement? Like, just easy things like, if they post something, do they get 1 like? Do they get 150 likes? And then think about all the people that follow them. If there's really credible people in the space, like some of the early OGs of Bitcoin and cryptocurrency, if the Roger Veers and the Vitaliks and some of these other people are following them, that to me already screams credibility, because most likely they met them in person, right? You look at shares, right? If somebody posts something, is there a lot of engagement from people sharing? So if you share, in my opinion, much different than a like and a lot more significant. A like is like, yeah, that's pretty cool. Share is much deeper in saying, I'd like to share this also with my network because I found a lot of value in that. So that's just a little sneak behind the curtains of how CoinGenius analyzes this kind of stuff from the social side of things. And then just analyzing sentiment. And there's a tremendous amount of tools out there that allow you to do this. We're developing our own proprietary NLP and sentiment engine as well. But, we're one of many, right? There's so many good tools and so many good companies out there. You have the Masaris of the world. You have Sentiment. You have, Crypto Compare, CoinGecko. You even have things like DApp Radar, which is another cool one. So you can actually see the dApps being built on top of, some of these smart contract ecosystems like Ethereum and Tron, et cetera. So you can actually see what people are doing and how many users are actually utilizing these dApps that are built on these ecosystems. So that's what I look at first and foremost over anything. Is this a good use case? Is this a solid project? Does it have a team that can execute? And are people actually engaged at the development level, as well as the people that are supporting the project, as well as the influencers that are supporting those people? If all those check out, I would say that that's a pretty strong project. And I know I skirted around your question about giving you examples or specific calls about projects, but there are some that I'm, looking at over the long term. I know this is, bandwagonish, but Chainlink to me is one of those that meets a lot of those criteria that I just set out. Another criteria that they meet that wasn't on that list, which is, do they actually have established partnerships with credible players like Google? They do. You look at the Tezos of the world. I think that solves an incredible problem, because if you think about it, if you put your money in Wells Fargo, Bank of America, or any other bank, and you're making, in some cases, 0%, and maybe you at some point have to pay the bank to keep your money there. Comparatively, you put Tezos, you say you buy 10 Tezos on Coinbase. If you keep it on Coinbase, don't quote me on this, but I think they're paying about 5.76% for you just to hold it. Where else can you get that right now for the average person? I think that's extremely meaningful, and the fact that the world doesn't even know that exists is what motivates and inspires me to share this message and to let people know that this whole new world of decentralized finance and digital assets and decentralized technology is going to take the world by storm, and hopefully you can get in early enough, and you have a long enough time horizon to weather a few storms.
I love everything that you just said. I want to try to yes and to a couple things you said. First is Tezos and staking. We didn't mention staking. How can you make money when the market goes up or down? Staking or loaning.
Yep.
You can loan your money, you can loan your crypto, or you can stake it. So you can make percent no matter what. If you're investing, and here's the other thing was investing versus trading. Okay, trading means what Miss Sam had said, store in stable coin and come in there and flip it through the volatility. First of all, we don't know where the bottom is or the top, so it's kind of riskier now, but you can do that. And so investing is what Jeremy had said, picking out a project that you really are passionate about and you feel like they reach all of the values. And another thing that I'll say is I learned a very valuable information over my time is invest in the integrity of the team. Anybody can say anything, but if you feel the integrity of the actual team, or the CEO or the founder or the people that they put around them, if you feel they have good integrity and track record, they're more likely to succeed if they're more organized, rather than a couple people who are like individual or like, hey, we're going to do this, we're going to do that. They're going to keep seeing failures, and every time, like, it takes one mistake to defeat all of your successes. Because every time you make a mistake or a team makes a mistake, it brings the sentiment down, and the sentiment goes down, so does the value of the investment. So these are some things to think about. So if you want to, the main thing to get here is trading versus investing. Investing is long-term. It means you can just sit and wait. Trading is you're in there and you're swinging. Two completely different strategies. Definitely need to know what you're doing, more for trading. But I would still say, of course, do your research, stuff like that. So hopefully that helps.
So another thing that we can discuss as well is how you can actually drive the market. With everything that is going on, some of the changes being seen, sometimes I think it's wise to look into blockchain investment opportunities. Okay, so think about it. There are social media blockchains out there like Peppo and Float and a few other ones. If we're all going to be sitting at home, not doing anything, why not invest in those types of technologies? That's something to consider.
I'm going to add a different angle to this because I know we've been talking about the investment side. I'm still of the perspective that the radical impact to business is going to be people within a year are going to say, well, how can you prove that this wasn't produced in a area that it was exposed to X virus? There's also additional questions that are going to come up, everything ranging from slave labor to the use of forced work camps, that kind of a thing. And then I think people also want to know, where things are. I mean, you mentioned Anthem Gold, and I think that's kind of the pun intended gold standard for how we should be looking at some of these supply chain issues. One project I want to bring up is Concordium, which is at concordium.com. And so they've actually put an association together in Europe, and what they're looking to do is to bring the cross fungibility in across different blockchain projects. Sam, you and I've talked about this, about PAC Global, and full disclosure, I am a board member there. With PAC, what we've been looking at doing is how do we take data from multiple blockchains, say healthcare, social giving, and a couple other things, and allow them to be purchased by traditional business. Because what a lot of people aren't aware of is that while everything we do in the blockchain world is digital and smart contracts, with the exception of the management consulting work that I do, but in the traditional world, if someone wants to buy data, like in many cases, they'll send a fax ordering. Okay, and I just worked with a client about a month and a half ago that did that. So there's a need for integration into these ecosystems. With PAC, we're looking at building a portion of that, but I'm telling you that Concordium is something more interesting that's looking at the backbone of like how you're going to trade all of these tokens in between companies. I think we should also be looking at the fact that the World Bank has issued over $150 million worth of Ethereum bonds So, now what we're looking at is we're looking at additional investment opportunities, obviously on a larger scale, potentially more institutional scale, but we're looking at, products that didn't exist previously. And also the way that some of these crypto projects have been set up, specifically the ones emanating from England, in many cases, a token is tied to one share of stock. So what you're also looking at is a derivative product there as well. So these could get kind of interesting. And then the last thing I'm gonna throw out, and I'm on the fence if I'm a fan or not of IBM's utilization and implementation of Hyperledger. But what IBM has done working with Stellar is, remember I was talking about banking fees and overnight loans and that kind of stuff? Well, all the banks make money by charging fees. And what they've realized is that moving into the future, they can't charge the onerous fees that they used to. And they still have the problem of going in between multiple currencies. Like, let's say that, I mean, it could be, something in Dash, something in Bitcoin, something in Ethereum on one side of three different people doing things. But imagine that Jeremy owns a dairy farm in Germany, I own a milk processing plant in Sweden, and Christina owns a grocery store in Denmark. We're talking about three different currencies there. Every time you transfer those currencies, you have to pay some sort of exchange conversion that could range, depending on how big you are, up to 20%. So that's another big opportunity I see cryptocurrencies coming in is all of this exchange. And then to echo what Jeremy had talked about with dApps, I'll put it to you this way. One of the projects I'm working on is forked off of Bitcoin, and that's Pack Global. Dash is also forked off of Bitcoin, but it's operating on an earlier implementation of the code base versus 0.17, which is the current code base. And so a lot of what is going to start coming together is we're going to have the financial sector and the tech sector and maybe even management consulting having conversations to really understand this stuff better. Because it's one thing to look at this from the trader's lens. It's another thing to look at this from the investor's lens. It's a different thing to look at this from the corporation's lens, but then also to understand the complexities of the technology. That's why we have these types of conversations, because there's a lot to unpack, and there's not a lot of time to do it in.
Agreed. Thanks, Oz. I'm so glad that you brought up derivative products. I thought I was done with my questions, but one last one for everyone. Maybe it's more of a statement. I'd love to hear your guys' thoughts on it. Beyond the technology and beyond the coins, as Oz mentioned, there are things built on top of this. Beyond dApps, there are services, an entire industry that's coming to fruition. We talked earlier about a Visa card that you can use your crypto. That is Daniel Goldman and the Turnio crew and their block card product. So that is like a derivative product of blockchain. You also have, would take Brandon Cooper's Aphid, which is an AI bot that automates, replicatable things for you, that you can have side hustles running on this bot while you work your normal job from home. These are things that you can start digging into and, helping protect yourself and have some risk management through some education. So beyond the coins that we asked about, do you guys have any other projects that you'd like to plug, especially if they're tied directly to earning passive income or any kind of strategy to help people get a few extra dollars in their pockets?
There's a lot that you can do with that. You can use fiat like Lolly. You can shop on Lolly and gain Bitcoin using that. You can also, like, I'm doing social impact blockchain with my stable coin. Like I said, we are a financial literacy program at Give Nation, and we reward in a stable coin for financial literacy. So if kids save, if they give to charities, which is something that you can do on our platform, and other blockchains, you can give to charities. For instance, right now there's a lot of aid relief going on with medical blockchains. We still need that technology. We still need, like, for instance, I got a payment for billing, and it was $1,000. And they were like, oh man, well, my bank, I'm in little podunky Wichita, Kansas. I'm embarrassed to say, but I am. And my bank is a credit union, and it's a private little small town credit union, but I've been there for 20 years, and it's really hard to get me to change. Kyle and I are Virgos, and we don't change well. And so I just have never used another bank account. So wires are sometimes confusing because they don't have a SWIFT code there. So she sent me a payment via PayPal, and $1,000 payment was $36, I think, with PayPal. That is absolutely ridiculous. She could have went into Gemini and, got a stable coin and then sent me a stable coin in payment, or just sent me Bitcoin, and I could have easily, transacted to stable coin or stuck it in my bank account. So, there is so many different ways that we can use the cryptocurrency market right now, and we should use it, especially if we are believers, and we want this, and we believe in the technology. And that's the biggest thing that we need to focus on right now, especially thinking about the long term. I don't know about everybody that listens to the show, but I mean, we got in really early. Have any of us truly lost anything here? I know that I haven't. I mean, I went all in when Bitcoin was 1,700. Like, I put in my nursing retirement when Bitcoin was 1,700. So have I lost anything? Absolutely not. Am I gaining experience and knowledge right now and being able to sit down and really educate people on why we should be utilizing this ecosystem, this new financial system? It's for the right reasons. So we do need to be using this every single day.
I mean, I took major hits in 18 and 19. Some were related to working with ICO projects. Some was part investment. But I think very much like what Kyle has talked about, the strategies have improved since then, and we've had the opportunity to make some rebounds. And I think this year is going to be an interesting year if you can actually get up to speed on what you actually need to know to make some concerted, smart decisions around it. But very much like everything else, and stating that this is none of this is financial trading advice or financial advice. Look, there's three different perspectives. You can buy and hold, okay, and I think for some people, it's trying to figure out how you get into the market, understanding that the market pressures are largely being driven by macroeconomic, geopolitical, and pandemic forces. That if you remove those, the market would be quite different. The second is that you could do light forex trading, and then the third, I think, is some permutation of how you actually get involved with the market and trade, whether that's on one exchange or multiple exchanges. And kind of echoing Kyle, probably multiple exchanges, because you're looking at different limitations on each exchange. But to get involved easy, I think Lolly, like you said, is a great way to do it. Get Pi, PEI, is another one which just gives you earning credits. So I mean you go, it's 1% cash back, but it's paid out in Bitcoin. And then there's probably about
sorry, XYO, the coin app where you're just getting passive passive tokens for basically your GPS data.
Yeah, but I would table XYO for right now. I would say that there's more consumer-centric focused, simple applications that are out there that would allow you to do anything from putting crypto in a debit card and spending it like cash to something else. And I think one of the things that just the average consumer could look to is that, like, look, if you see a dip bounce, and if it's been like a 40% market correction, it's not a bad idea to buy a little bit of crypto, stick it on a card. The price goes up. You've literally doubled the amount of money that you have on that card. And what you can do is you can utilize that for your everyday things. But the use cases for just regular folks getting into this are very much like the use cases that are complicated for like when banking was rolled out nationally, in the middle part of last century, especially after we had people coming back from World War II. There's a whole new host of products that people have to learn. And I think, dipping your toes in with something simple like that is probably the easiest way to just start getting acclimated.
I agree with you wholeheartedly. And also, I mean, you protect yourself or go in super, super easy. Instead of letting Google steal your information, why not use Brave browser and accumulate that token for watching ads instead of it being, given to you, forced down your throat. So, there are so many different ways that you can passively earn cryptocurrency too. It just takes a little bit of research or asking some of us in the crypto community. You can sit there and do absolutely nothing and mine tokens from your PC. So, I mean, get involved right now. Do some research right now. You're stuck in your house. You have a lot of toilet paper. You can log in online. You can log in online anytime and ask any of us for tips and tricks on how to earn cryptocurrency by doing absolutely nothing for companies that we don't work with, advise, or own. So
I love it. Well, I would like to just kind of plug that CoinGenius is trying to aggregate all of those together in the same place so that users can have access to passive income strategies and understand this landscape and understand what mining is and what your options are. Understand, how many of us are really big believers in this industry and want to see blockchain technology move forward and all of the cool things that we can do with that and AI interoperability and just the world of possibilities, which is a nice way to wrap up for today, since it's been kind of a rough week and we needed to get this information out to you guys that there are a lot of possibilities. There are ways to hedge your current positions and educate yourself on new strategies. There are ways for you to have risk management, and there are ways for you to look at this that maybe it's not doomsday, but maybe it's an opportunity for you. So with that, thank you guys so much for coming and helping educate everyone. It's much appreciated. I really appreciate the short notice. Just for our listeners, everyone came together in less than 24 hours so that we could get this out to you.
Yeah, really appreciate it. Everybody, go ahead.
No, I was
Absolutely
going to ask if anyone had any last comments, but you guys feel free to talk for as long as you want.
Yeah, just one last comment I wanted to close with, but Kyle, if you have something, go ahead.
I was just going to say one quick thing. Basically, what you can do in a situation like this is, if 90% of everybody's thinking one way, think the opposite way. If everybody's going to think negative, think something positive, because you can go find a solution, and this can be your solution to get out of whatever this hole is going to bring everybody into. So be a white hole instead of a black hole. That's all I got to say.
You know what? That plays really nicely into one comment I did want to make earlier, but I'll make it right now, which is a lot of people don't necessarily agree with Warren Buffett or his methodology, but obviously he's a multi-billionaire for a reason, right? And he always says, buy when people are fearful and sell when people are greedy. I'd say that there's a heck of a lot of fear out there right now. And he's been hoarding well over $100 billion in cash for, I think, a few years now. And people didn't realize why. I think we know exactly why. Because he waits, he's patient. He's not an investor that's looking to recoup, money based on a bad investment last month. He's looking and waiting for the right time to strike. And I think this is the exact scenario they wait for. And this is why they'll continue to be multi-billion-dollar companies, and, he'll continue to grow. So if you take that contrarian approach, just like Kyle just said, I think that's a really good approach. But the other message that I have for everybody as we part ways here, which is really just issuing a challenge to anybody out there in the world that might be listening. And hopefully we can share this with as many people as possible. With what's happening, obviously, in the global macro economy, with this new technology, which is decentralized technology that allows us to do things that we otherwise wouldn't have been able to do, there is a tremendous amount of talent and smart people out there in the world. I think right now is going to be the biggest opportunity we've ever seen for people to rewrite the rules, right? To even the playing field for the everyday person. And I think that's the power of this blockchain technology. We are Blockchain Versus Podcast. It's how can blockchain actually change the world? Well, I think you have your opportunity. So if anybody's out there that has ever thought about and has the ability to make a change and to do things in technology, to level the playing field for things like big pharma and make it affordable for people to actually get medication, have sustainability projects, right? There's so many different things that you can attack. And I think right now there's going to be some big companies that may go out of business. And, you know, at the end of the day, the government can't save and bail out everybody. So here's your chance. Go do it.
Well said. Before I give my closing thoughts, can each of you tell our audience where to find you? And we'll just kind of make it available on the offline content as well, please.
This is Kyle. I lurk everywhere. I am the internet. I've been on the internet since dial-up, so you can find me anywhere. I'm on Instagram, Kyle Ray Official, Telegram, Crypto Kyle. I got crypto groups. I got Instagram groups. I got marketing groups. Just like hit me up on. Just email me. That's the best. If you want to email me, Crypto Kyle, YPTOKYLE at Kyle Ray, KYLEREA.net. And then, yeah, hit me up there, and then I'll just send you down the rabbit hole wherever you want to go.
Nice.
Kyle is very easy to stalk because he is an anime actor. So you can actually visit him everywhere on the internet. He is right. It's hard to get away from him. So, I love you so much. So yeah, I'm Elise Sam. You can find me on @EliseSam everywhere online, ALYZE. You can go to givenation.world and you can download our mobile application there. You can also see me and Oz over at Pat Global and at blockchance.eu in Hamburg, Germany. And then you can see some of my tech writing, and you can download my book or reach out to me on social media, and I will just give you a copy because I am in this for decentralizing education. And so if you don't want to contact me, if you are afraid after this show, you can just download it on Amazon or Google. It was the #1 new release on Amazon Business and Money in February. So I'm very excited. I hope that you enjoyed all of this, and thank you so much.
One quick thing. There's going to be a lot of opportunists here trying to take advantage of people in a down market. I have a crypto scams ebook, How to Avoid Crypto Scams. It's free. Go on Amazon, look it up. Avoiding crypto scams. So many people have been taken in a healthy market. Even more will be taken in an unhealthy market. Protect yourself.
And as for me, and Kyle, that's great advice, and I tell everyone go and get his book off of Amazon. I'm at Oz Sultan, OZSULTAN, pretty much everywhere on the internet, except for Instagram, where I'm Oz Sultan X. The easiest way to reach me, and it's less on the advice side, but if there's can ever be of any assistance on the consulting side with figuring any of this out for you, I'm available at oz@sultaninc.com. That's SULTANINC.com.
Beautiful. Thank you all for joining. If you would like to reach us here at the Blockchain Versus podcast, it's info@blockchainversus.com with the versus spelled out. If you'd like more information about CoinGenius itself or info about our partnerships, affiliates, APIs, data sources, all of the fun stuff that I'm doing over there, that we are all doing over there. My apologies to my amazing team of geniuses. And if you'd like to follow me, you can find me in our CoinGenius public and free Discord. There we talk about these things in real time with all of Team Genius. You can find me there at the same Twitter handle, at the same handle as my Twitter, which is @GirlGeniusXV. Until next time, this is Blockchain Versus.